This is Rod Kusin and Spooman for Risk for Friday, October 15th, 2010. All times on the chart are Central Standard Time. We're looking today at some of the internal workings of our new Prem strategy. And one of the things that we're able to do, we've created an indicator that allows us to plot on a single chart multiple stochastics with different tick intervals as well as from different data feeds. That can be useful in helping the trader at a glance see whether or not the market is trending up or trending down. So, for example, we have, in this particular case, 4 different stochastics based upon the same data feed, but with progressively longer tick intervals. So these are fairly short, and these are much longer. By way of consulting this information, you're still able to determine what the trend is. So as we mentioned, the idea is to recognize what the trend is. Trying to pinpoint exactly where crossovers take place could be quite difficult, because you can see, like right in here, this stochastic is just all over the place. Where in fact is it really turning? All right, here, where is this really turning? Hard to tell. This is a little bit more obvious, okay? But by then the other stochastics have already turned, so there's a delay. All right, that's typical of a stochastic. Now, to make sure you understand what I'm saying, let me illustrate. Now here's a typical stochastic on a 1,000 tick bar for the ES contract. When does the stochastic turn? Well, it appears to be turning right here. But the fact is, you really don't know that until the next bar. At least at some point in time when the next bar is forming, you know that this stochastic is turning. Now, that could provide for a nice short trade, but can we do better? Stochastics are calculated based upon the close of the bar. However, what if we were to figure out a way to run that calculation before the bar closes, and perhaps at specific intervals during the formation of that bar? For example, supposing we updated the calculation every 100 ticks. Every 100 ticks on 1,000 tick bar, we redo the stochastic calculation. If we did that, we'd be able to determine more precisely when this is in fact really turning. Now, is it possible to do that? Absolutely. Here is one of the indicators that we run in the background of our system. Now, this indicator doesn't plot anything. All that it does is run calculations. And it's a very versatile calculator. We can run multiple studies, such as calculating the MACD, detrended price oscillator, adaptive price zone, stochastics, linear regression. We can run any of those studies individually or all of them combined, and we can run those calculations based on any tick interval that we want on any data feed that we want. Here, for example, it's running the calculation of a stochastic on an 11,000 tick bar interval, and we're updating that calculation every 200 ticks. So you can see we can probably get pretty close to accurate as to when the stochastic is actually turning, or when it's getting overbought or oversold. Our calculators our indicators, have the ability to run those calculations very precisely. Now, what do we do with the information? Oh, now this is where it gets really interesting. We're going to send the calculations to another indicator that's going to crunch the numbers and combine the results based upon an array of different circumstances. Let me explain what I mean. Supposing I wanted to know when these two data feeds shown right here are either overbought or oversold. And by overbought and oversold, I'm going to give it a definition. I'm going to say I want to know when slow K is below 5 and slow D is below 15 on both of these data feeds. And that's all I want to know. Or if it's overbought, 95 and 85. In addition, I want to know when this data feed and corresponding tick interval, when the stochastic on that is turning. Now, if I had to plot out those individual stochastics on a chart and try to guess exactly where these things are taking place, I'd begin to have some problems. But this indicator takes those specific conditions and plots the result in a green bar. During the move down this morning, okay, from this point all the way down, we don't have any green bars until right down here at the bottom. That's when the combination of those conditions was in agreement. Now, to show you, to kind of break apart that calculation, what we've done, we've taken one segment of that calculation and plotted these blue arrows whenever the two data feeds that we were making reference to became oversold. And we had numerous instances on the way down when that took place. It was oversold here and here and here and here and so on and so forth down the line. But it was never oversold at the same time our volume indicator was going positive until right down here. I think you're beginning to get the picture of what our system is capable of doing. We can get real precise about when certain conditions are taking place so that the trader doesn't make a mistake. And if he does make a mistake, hopefully it's not a big one. But we'll take it a step further. Now let's look at a strategy that we set up that says, all right, give me a trade signal. I want to trade this condition. I want to know when the stochastic on an ES 50, 100, and 300 is turning. But I also want to know when this data feed is either overbought or oversold and the stochastic is turning. And I want to know that those conditions are in agreement with the stochastic that is set up on our volume indicator. Now, before I leave you and show you the results will be plotted with a great big green bar for a buy and a great big red arrow, arrow for a sell. Green arrow for a buy, red arrow for a sell. You didn't see any green or red arrows as the market dropped. You didn't see anything happening as the market went up. Then it went down. We didn't get an arrow until right in here at around 11:30. Now, unfortunately, we got stopped out. The idea was good, but we were too early. We got stopped out, didn't make anything on that trade. In fact, took a small loss. And by the way, we set our stops really tight because our system is very accurate. So we don't need to have great big stops. We don't want great big stops. We want very tight stops. So what else happened? We now finally get a green arrow late in the day, right here, moves up nicely, hits our profit target, and no other red arrow takes place until close to the close of the day, and that too hits its profit target. 2 out of 3, not bad. Let's look at a different strategy. Let's supposing I want to trade the following combination of circumstances. I want to trade with the trend. I've got to know what the trend is, and I only want to trade with it. So I'm going to trade in only one direction. And in this case, I'm going to set this thing up to trade long only when the trend is in agreement. So that trend is going to be defined by our volume indicator, an SPC 10, and I want the stochastic on a 300 ES tick bar to also be in agreement. So there's my trim, if you will. Here's the big trend, here's the trim, and that's the condition I want to trade. I'm not going to be particularly concerned about a stop because I'm trading with the trend. So I'm going to set up a profit target, and the profit target in this case is going to be 6 ticks. And I want to trade with the trend, and here's the results. I have no trades prior to the open, and by the way, I'm also plotting stochastics on this chart. So I've got both of my stochastic information for visual reference. It doesn't do anything more than just plot the stochastic. It gives me a visual confirmation. And then the green arrows are the entries for this particular strategy. Okay? Those are all of my entries. I've ran through that fairly fast. But what's interesting about that, because I'm trading with the trend and I'm trading with a fairly good trim, if you will, what happened? I made money on every one of my trades. I hit my profit target every single time. So much so that I can now display this equity curve. Oh, and the one thing, the one thing I don't like about our system, sometimes our equity curves have no curve. They're just straight up. Okay, that's a flaw. I'm trying to get around that. But anyway, that's the results of our equity curve. So what do we learn? We can set up our strategy to do just about anything you want to do as a trader, and have, because of the way in which we run our calculations, have very precise entries. And there's one other thing that we do. On every one of our charts, we run calculated retracement lines. These lines are created by very specific conditions that our computer has recognized to be a high probability retracement. When the market is moving down, if we get a retracement line above the market, we paint a white line. If it's below the market, we paint a magenta colored line. Now look at our retracements. This is the beginning of the day. Some of these retracements were holdovers from the previous day. Now I'm going through this fairly fast just to show you the variety of different retracements that our computer said were high probability. Now if we went back and we counted all of these retracement lines against and compared the retracements that were hit to those that were not hit, today's accuracy was 86%. 86% accurate. That's today. Yesterday it was 95%. The day before that it was 94%. The retracement lines are very, very accurate. And how can that help you? If you know where the market is going to go before it gets there, you have a very much, the probability of your success on a trade has dramatically increased. So if you're taking a long trade and you've got a retracement line above the market, that's a good thing. If you're taking a short trade and you've got retracements below the market, that too is a good thing. It can make a big difference in how much you will end up making every single day. So come to our website, give us a call, ask for a demo. We'll be happy to help you out. And this is Rod Kusin, Spooman for Risk.